And it's important for people to realize that the tax return itself is the mechanism for other things. So when I say other things, if you're especially if you're a single parent, right? If you have single parent, you have young kids, you're eligible for the CCB, the Canadian Child Care Benefit. But if you don't file your tax return not before, but by July 1st, they cut you off. But they'll restart it and they'll pay you the retroactive, like they'll go back, but they don't know how much you're eligible for until you file the tax return. So it's super important to realize that the tax return, yes, there's the tax piece, but they also use the tax return for government credits. And those credits include the CCB, the Canadian Child Benefit, the GST HST quarterly credits. For Ontario, it's the Trillium benefits for kind of the energy and rent piece. So what I found was that, and also like there's also the working tax credit. So if you're earning less than 30,000, you're potentially eligible. So what I found, Gordon, was that we filed those tax returns for multiple years for a client, and they thought they owed, and then even if they owed a little bit, and they didn't, but they thought, like, sometimes they thought, oh, I owe this little bit, but they were eligible for like $1,000 per year of government credits.
Wow.
And if you owe, what the government will do is like they'll take your GST like that GST credit, and they'll apply it to past amount owing, and they'll net out, and then you get the difference. And then, Gordon, it's just that it's the confidence